Hello everyone, George DeSantis here with a midweek sort of follow-up on the look at the market that we did last weekend. Especially in light of the recent volatility in the past couple of days at least, including today. So what I'm going to do is take a look at the general market, the S&P 500, and we'll start with a weekly chart of the S&P 500. But as we always do, let's bring up the disclaimer and realize that I'm not an investment advisor or professional investment advisor. So this is merely for educational purposes, for my own purposes, as well as the fact that I share it on YouTube with those who care to take a look at it. So let's start by looking at a weekly chart of the S&P 500. So here's a weekly chart of the S&P 500. It's a little busy, but I'll try to make it clear to you. First of all, we look at the moving averages, as you know. So this is a 4 exponential moving average, the 9 exponential moving average, and the 30 weighted moving average. We can see that insofar as moving averages are concerned on the weekly chart, we still have an uptrend, but we're seeing some weakness here. Insofar as that's a bullish scenario. Okay, last week, well, on the weekend, I mentioned that we came pretty close to this. We were riding this 2 standard deviation upper Bollinger Band, and we are likely to see. I said I won't be surprised to see a bit of a pullback. Well, so far this week, this is what we got. We're at 29.53, and we can see that the parabolic is coming pretty close to being hit by this bar. The other thing to notice here, insofar as the bearishness is concerned, we had a bearish engulfing candle here. This body of this candle totally engulfed this one. Then we were followed by a bullish candle, and we have now another bearish engulfing candle. I wrote it up here. See, this body of this candle totally engulfs this one. So far this week anyway. You have to remember, we're on Thursday now, and we still have a day to go to complete the week. So take that into account. So we still have the moving averages above each other, indicating an uptrend, but we're showing some weakness here. And if we go down to the MACD histogram, you could see that divergence, because if we plot a line here from high to high, right, and another from this high of the Bollinger Band to this high here, you can see that there's a divergence. As we make a higher high, MACD histogram makes a lower high after this bearish, this bearish intervening 3 weeks here. So that bearish divergence of MACD seems to be playing itself out. That's my guess here right now. If we go down to the other indicators, you can see that RSI 12 is still above that 40% line, the yellow line. And Williams percent R is still above that magenta line, -50. So the weekly chart is basically still pointing to a bullish uptrend. Okay, now we got to go to the daily chart and see what we got there. So here's a daily chart of the S&P 500. Busy as usual, but I'll try to make it clear, as clear as I can. There's a lot of stuff here. Anyway, the first thing we should notice, and I'll expand it to show it more clearly, certain things when I want to highlight certain things. For example, the 4 EMA, that yellow line, crossed below the 9 in a very dramatic way, and even crossed below the 30 more recently, okay, and especially today. So here's what we have on the daily chart. Now, daily chart seems to be breaking down, and we might go further, and I'll elaborate on this as we go along. You notice that the parabolic has now switched to being above the most recent bars. So that says we now have a switch in the trend from an uptrend to a downtrend. Okay. Now the next thing I want to point out is that the Fibonacci retracement levels, I put them in here. Okay, Fibonacci retracement levels and the price that is associated with those levels. So we took a Fibonacci retracement from this low here in June, I think it was in June, all the way up to the high, the most recent high. And so we have a 23.6% retracement level here. And we're pretty close to that. We've actually broke below it. So we are 29.53 now. Now the next level is 38.2. And let me just broke the chart up like this, and you can see it more clearly. Next level is 38.2, and that would be at 29.13, and so on. The 50% level would be at 28.79. And the 618, the golden rule, would be at 28.43. So looking at the daily chart, we've seen a lot more bearishness here than we've seen before, and we do have a breakdown occurring. And so the big question for me is, how far down do we go? Well, the next level of support should be at this 29.13 or so, that level, that 38.2 level, and that's a very common retracement level to that percentage, that Fibonacci percentage. And here's something else to note. You see that held us support here when we had a brief pullback. It held us support right here at the end of June, and then we went up again. So this will be a key level here at 38.2 retracement level at about 29.13. So we may have another, maybe tomorrow or maybe continuing it the next week, we might get a continuation of this pullback. What would even emphasize that fact is if we see, for example, the 9, this red line, breaking below the 30 weighted moving average. That would be a clearer signal of a more serious downtrend occurring. So the other thing, I think I pointed out already, that parabolic is now above the most recent bars. What I'm also noticing here is that if you look closely, you can see a bit of a squeeze of the Bollinger Bands. And now it seems as though we're riding the lower Bollinger Bands. We're riding the lower Bollinger Bands down. And we may see this coming all the way down to this 38.2 level, somewhere around there, or even the 50% level. So that is insofar as the price chart here in this area is concerned. Now, if we look at the MACD histogram, we could see that we've been in bearish territory on MACD histogram since back here, since what date is that? July 17. We've been in bearish territory. Looking at RSI 12, RSI 12 on the daily chart is not as significant as on the weekly, but it broke below the 40% line, and that's problematic. It just went down to 37.51. And if you look at one of my favorites is this Williams percentile indicator with a 30 period, and notice, folks, that it just broke below the magenta line. And I talk a lot about the Williams percentile indicator, which I like so much. And notice when it broke above that magenta line here, we had the beginning of an uptrend. Well, it was close to the beginning. It started back here, but it confirmed that, okay? And now we're breaking below it. So my guess is that we have a little more downside to go here before we turn around and see any more bullishness. But the fact that the weekly chart, except for the MACD histogram and the divergence on that, the fact that the weekly chart still is looking somewhat bullish. This pullback may not be, we could hope that this pullback may not be more than this to this 2900, 2913 level, or even the 2879 level of 50% retracement. Since we have some time left in this 15-minute video, I bring up a chart here with the indicators, some of the indicators that Jake Bernstein uses, and I'll show you what I find here. You can see that I won't go into the averages because he uses different moving averages, okay? But I'll show you his oscillators here, and you can see as of last week, as of Friday, these oscillators were also showing divergences, because as the market made that high, just like MACD did, you can see as the market made that high, the momentum indicator was making a lower high, and now we broke through that level, and that's where we got now. And the same thing is true of the detrended price oscillator, which he also uses. And this is one that I think Dr. Ehlers developed for his own use. So you see, we had these other divergences, not just on the MACD, but on the weekly chart of the MACD, but on the daily chart. We're using this momentum and the trended price oscillator. There were also divergences, and now we see the breakdown. I just wanted to show you that. You can see, so in that sense, because we looked at these retracement levels before, you can expect some more downtrending here to go to the 2913 or 2879 level. Well, that's enough. We'll be doing the look at the market on the weekend. I'll be going away for a few weeks, but we'll do it this weekend, and then I'll skip a couple of weeks because I'll be traveling. Have a good night, and protect yourself.